If you receive your state pension paid directly into a bank account, there are several things happening right now in 2026 that you absolutely need to know about today. The Department for Work and Pensions has introduced new powers under a major new act of Parliament that affects how your pension payments are verified and protected going forward. And while some of what you may have heard about these changes has been exaggerated or misreported online, there are real and important things every pensioner needs to understand right now. This video is going to give you the accurate verified facts about what is actually changing, what is not changing, and exactly what you need to do to protect your state pension payments. Let us start with the most important clarification of all, because there is a significant amount of confusion and misinformation circulating about this topic on social media and online today. Your state pension itself is completely safe. The new DWP bank account powers introduced under the Public Authorities Fraud, Error, and Recovery Act 2025 do not apply to the state pension. The state pension is explicitly excluded from the new eligibility verification measures introduced by this act, and that exclusion was confirmed officially by the government as of July 2026. The new DWP bank account monitoring powers apply only to means-tested benefits, specifically pension credit, universal credit, and employment and support allowance, not the state pension. This is critically important because millions of pensioners have been worried that their state pension payments could be suspended or reduced based on what they have seen shared online. Your state pension cannot have new bank monitoring powers applied to it, and it cannot be added to the scope of those powers without a completely new act of Parliament being passed. However, and this is equally important, there are real changes to how the DWP and banks verify bank account details for pension payments that every pensioner must know about right now. The DWP has been conducting enhanced verification checks on the bank accounts used to pay state pensions to ensure that payments are going to the right person and the right account. These checks are about ensuring your name, address, sort code, and account number on DWP records match your bank records exactly, and mismatches can cause serious payment problems. If the DWP system finds any mismatch between your records with DWP and your records with your bank, it can trigger an identity check and potentially delay your pension payments. This is not a new power to monitor your spending. It is a verification process to ensure your state pension is reaching the correct person in the correct account without any error. The new rules do not cut your state pension rate. They do not assess your savings. They do not monitor your daily transactions or your everyday spending habits in any way. However, if you ignore any letter or request for information that arrives from DWP during this process, your pension payments can be paused until the verification is completed fully. This is the single most important practical warning in this entire video. Do not ignore any official communication from the DWP about your state pension bank account details. Now, let us talk about the Public Authorities Fraud, Error, and Recovery Act 2025 in detail, because understanding what it actually does and does not do is critically important for your peace of mind. This act received royal assent on the 2nd of December 2025, and implementation began in phases from early 2026, starting with the largest banks first across the United Kingdom. The act gives the DWP new powers to work with financial institutions to verify the eligibility of people claiming means-tested benefits like pension credit and universal credit specifically. Banks can be asked to flag accounts associated with certain means-tested benefit claims where there may be a potential discrepancy in the claimant's declared circumstances or savings. This is not about reading your bank statements, monitoring your purchases, or examining your everyday spending. It is specifically about checking whether savings or capital thresholds have been exceeded. For means-tested benefits like pension credit, there is a savings threshold. If total savings exceed £16,000, entitlement to pension credit stops completely under current rules. For savings between £10,000 and £16,000, a tariff income of £1 per week is assumed for every £500 above the £10,000 threshold. If a bank flags that a pension credit claimant has savings significantly above these thresholds, the DWP receives that flag, and a human caseworker then reviews the case individually. Getting flagged does not mean your payment stops immediately. You continue receiving payments while DWP reviews the flagged information through a proper human-reviewed process. If DWP has questions following a flag, they will contact you directly by letter or through your online journal asking for an explanation and giving you time to provide evidence. The Public Accounts Committee of Parliament has specifically warned the DWP that these new powers must be used effectively and proportionately with proper safeguards for claimants. Baroness Finn of the House of Lords welcomed the provision for human decision-making to protect against mechanistic or AI-driven decisions that could wrongly affect benefit claimants. The overpayments that triggered this legislation were genuinely significant. DWP overpayments totaled £9.5 billion in 2024 to 2025, representing 3.3% of benefit expenditure. This is the context in which these new powers were introduced. The DWP has had its accounts qualified by the UK's chief auditor for 37 consecutive years due to fraud and error. Now let us talk about the state pension payment itself, because April 2026 brought a genuinely important and positive change to state pension payments that every pensioner should know about. From the 6th of April 2026, the state pension increased for more than 12 million pensioners in the United Kingdom through the continuation of the triple lock guarantee. The new full state pension rate for 2026 increased to £230.30 per week for those with a full national insurance record of 35 qualifying years. The basic state pension for those who reached state pension age before April 2016 also increased, rising in line with the triple lock, which takes the highest of inflation earnings, or 2.5%. If you are not receiving the full new state pension amount and you believe you have 35 or more qualifying national insurance years, you should contact the pension service to check. It is possible that your national insurance record contains gaps or errors that are reducing your state pension below what you are genuinely entitled to receive under your actual contributions. You can check your state pension forecast and your national insurance record for free at Gov.UK by using the Check Your State Pension service, which takes only a few minutes online. If you find gaps in your national insurance record, you may be able to make voluntary contributions to fill those gaps and potentially increase your state pension entitlement going forward. Now let us talk about something that is genuinely urgent for many pensioners right now: the bank account details verification process that DWP is currently conducting across England. The DWP has been contacting pensioners to ask them to verify that the bank account receiving their state pension payments has the correct name, address, sort code, and account number. The most important thing you need to do today is make sure your bank account details with the DWP are completely accurate and that your name on your bank account matches DWP records exactly. Even small differences, a middle name that appears on your bank account but not on your DWP record, or an address that has changed, can trigger the verification check process. If you have moved home recently, changed your name, opened a new bank account, or switched banks, you must notify the pension service as soon as possible without any further delay. You can update your bank details and contact information with the state pension service by calling the pension service on 800 731 469, which is free to call from most UK phones. Alternatively, you can update your details online through your personal tax account at Gov.UK if you have an account set up with Government Gateway already. If you receive a letter from DWP asking you to verify your bank account or confirm your personal details, please respond within the time frame stated in that letter without delay. Ignoring a DWP verification letter can cause your state pension payments to be paused while the outstanding verification is completed, which can cause genuine financial hardship. During a pause in payments, you would need to contact the pension service urgently to explain the situation and provide the requested information to get payments restarted quickly. It is always faster and better to respond promptly to any official DWP communication than to ignore it and then have to deal with the consequences of a paused payment later. Now let us talk about one specific situation that is causing particular problems for pensioners right now: people receiving their state pension into a joint bank account. If your state pension is paid into a joint bank account that you share with your spouse, partner, or another family member, there are some specific things you need to be aware of. The joint account holder and the account itself must be clearly linked to your identity in DWP records in a way that allows the payment to be correctly attributed and verified. If the primary name on the joint account is a different name from the one DWP has on record for you, this can cause verification issues that delay your pension payment unnecessarily. Make sure the pension service has the joint account details correctly recorded and that your identity is clearly associated with that account in both DWP and bank records. If you are considering switching from a joint account to a personal account for receiving your state pension, contact the pension service before making any changes to avoid disruption to payments. Now let us talk about a significant threat that is targeting state pension recipients specifically, and that has caused real financial harm to many older people across the country in 2026. Pension payment scams have increased dramatically in 2026, with fraudsters specifically targeting older people who are receiving their state pension and using these DWP changes as cover for their fraud. Scam callers are contacting pensioners claiming to be from DWP or the pension service and telling them that their state pension is at risk because of the new bank account changes. They ask the pensioner to verify their bank account details by phone, to transfer money to a safe account for protection, or to provide their online banking login details immediately. These calls are completely fraudulent. The genuine DWP and pension service will never ask you to transfer money, never ask for your online banking passwords or login details by phone. The genuine DWP will never tell you that your state pension is at risk because of your savings level, because as confirmed earlier, the state pension is not means tested in any way. If you receive a call like this, hang up immediately, do not provide any information, and report the call to Action Fraud on 300 100 and 23 20 40 or at Action Fraud Police, UK Online. You can also contact your bank's fraud team directly if you believe you may have already provided any banking information to someone you suspect was a fraudster posing as DWP. Banks have specialist fraud teams specifically trained to help customers who have been targeted, and they can act quickly to protect your account if you contact them without delay. The genuine pension service number is 800 731 469. Save that number in your phone right now so that you can verify any caller claiming to be from DWP against the real number. Now let us discuss something that many pensioners who receive pension credit in addition to their state pension need to understand about the new bank monitoring powers and their claim. If you receive pension credit as well as your state pension, your pension credit claim, not your state pension, is what the new bank monitoring powers could potentially affect. As mentioned earlier, the new eligibility verification powers apply to means-tested benefits, including pension credit, which has the savings thresholds we described earlier in this video. If you receive pension credit and you have savings that have changed significantly, perhaps through an inheritance, a property sale, or investment returns, you must report this to DWP. Failing to report a significant change in savings while claiming pension credit is the type of circumstance that the new bank monitoring powers were specifically designed to identify and address. The system does not monitor your day-to-day transactions. It is looking for indicators that declared savings or capital levels may not match what is actually held in the account. If you are completely transparent about your savings and circumstances with DWP, these new monitoring powers should have no negative impact on your pension credit claim at all. If you have savings above £10,000 and receive pension credit, check that the tariff income calculation is being correctly applied to your claim, as this affects your payment amount. For every £500 of savings above £10,000, the system assumes £1 per week additional income, which reduces your pension credit payment accordingly. If your savings have recently dropped below a threshold due to spending or investment losses, you should report this to DWP, as it could increase your pension credit entitlement. Now let us discuss overseas pensioners, because the new bank rules have specific implications for those receiving their UK state pension while living outside the United Kingdom. If you live abroad and receive your UK state pension into an overseas bank account, you may be asked to provide additional documentation as part of the enhanced verification process. This could include a copy of your passport or national identity document, proof of your current address overseas, and a recent bank statement from the account receiving your pension. Overseas pensioners are encouraged to respond quickly to any correspondence from DWP because processing times for overseas verification can be longer than for UK-based accounts. If you have a choice, receiving your state pension into a UK-based bank account may currently be processed more smoothly than an overseas account during this enhanced verification period. You should also be aware that if you spend more than 26 weeks in a country where the state pension is not uprated each year, your pension may be frozen at the rate at the time of your move. If you have questions about your state pension as an overseas recipient, contact the International Pension Center at 191 218 7777 or visit the Gov.uk International Pension page. Now let us bring everything together with the complete action plan that every pensioner receiving a state pension should follow based on everything covered in this video today. Step 1. Confirm that the bank account details held by DWP for your state pension match your bank records exactly, including your full name, address, sort code, and account number. Step 2. If you have moved home, changed your name, switched banks, or opened a new account recently, contact the pension service on 800 731 469 to update your records today. Step 3. If you receive pension credit in addition to your state pension, make sure your savings and capital are accurately declared and that any recent changes have been reported promptly. Step 4. Respond to any official DWP letter promptly and within the time frame stated, because ignoring these letters can result in your pension payments being temporarily paused. Step 5. Check your state pension amount and your national insurance record at Gov.uk to make sure you are receiving the correct amount based on your actual qualifying years. Step 6. If you live overseas and receive your state pension into a foreign bank account, respond quickly to any additional documentation requests from the International Pension Center. Step 7. Be alert to scam calls from people claiming to be from DWP about your pension account, and remember that the genuine DWP will never ask for your bank passwords or transfers. Step 8. Save the genuine pension service number in your phone right now, which is 800-731-469, so you can always verify any unexpected caller who claims to be from DWP. Step 9. If you suspect you have been targeted by a pension scam, call Action Fraud immediately on 300-123-2040 and contact your bank's fraud team without any delay. Step 10. Share this video with every pensioner you know, because accurate information about these DWP changes could protect them from scams, prevent payment interruptions, and support their peace of mind. Now let us address some of the specific questions that pensioners have been asking online and through social media about these DWP and bank account changes in 2026. The first question is, will DWP see all my bank transactions and spending? The answer is no. The new monitoring powers focus on specific data points like savings levels and residency, not daily spending. The second question is, does my savings level affect my state pension? The answer is no. The state pension is a contributory benefit based on your national insurance record, not your savings. The third question is, could my state pension be stopped because I have too much money in the bank? The answer is no. Your state pension entitlement depends on your NI record, not your savings. The fourth question is, what if I received a letter from DWP that I am not sure is real? Always call the pension service on 800-731-469 to verify any communication before responding. The fifth question is, I moved house 6 months ago and did not tell DWP. What should I do? Call the pension service today on 800-731-469 and update your address without any further delay. The sixth question is, my name on my bank account is slightly different from my DWP records. Is this a problem? Yes, potentially. Contact both your bank and DWP to align your records exactly. The seventh question is, I receive both state pension and pension credit. Which parts of this video apply to me? Both apply the general pension rules and the pension credit bank monitoring sections. The eighth question is, I switched banks last year and did not update DWP. Has my pension been going to the wrong account? Call the pension service immediately to check and correct your records. The ninth question is, should I move my state pension to a different bank? Not necessarily. You can stay with your current bank as long as your details are accurate and match DWP records. The 10th question is, what happens if DWP sends me a verification letter and I do not respond? Your pension payments can be paused until you respond, so always respond promptly and in full. Remember that the vast majority of pensioners who have accurate details on record with DWP and who have not received pension credit overpayments will not be significantly affected by these changes. The changes matter most to those who have not updated their contact details recently, those claiming pension credit with savings near the thresholds, and those targeted by the scams we described. If you are in any doubt about your specific situation, the free and authoritative source of guidance is always Gov.uk or the Pension Service Helpline on 800-731-469 during opening hours. Age UK at ageuk.org. UK and their free advice line on 800-678-1602 can also provide guidance and support for pensioners who have questions about these changes or who need help navigating them. Citizens Advice at citizensadvice.org. UK offers free expert advice on DWP matters, state pension entitlement, pension credit, and how to respond to any official communication you have received. Thank you for watching this video. If you found it helpful, please like it right now so that more pensioners across the UK can find this accurate information when they need it most today. Subscribe to UK Housing Alert and hit the notification bell so you never miss an important update about DWP changes, state pension news, housing rights, and benefit entitlements for pensioners. We cover DWP changes, state pension updates, housing benefit, tenant rights, and financial protections for pensioners every single week in plain simple English so you always know where you stand. Please share this video with every pensioner you know because accurate information about these changes is genuinely important and could prevent real financial harm and unnecessary worry for many people. This information is educational and is based on Gov. UK, Public Accounts Committee, and DWP official guidance as of July 2026. Always consult Gov. UK or a qualified advisor for personalized guidance specific to your situation. Now let us go deeper into the topic of pension payment security because there are several additional things that pensioners need to know about protecting their payments in 2026. Many pensioners do not realize that their state pension payment can be redirected to a different account if a scammer manages to change their bank details with DWP fraudulently. This type of fraud is called authorized push payment fraud when you are tricked into making the change yourself, or account takeover fraud when someone else changes your details. Both types are increasing dramatically in 2026, specifically targeting older people who are receiving pension payments and who may be less familiar with digital verification processes. If you have ever clicked a link in a text message or email claiming to be from DWP and entered your details, please contact Action Fraud and your bank immediately to check your account. The genuine DWP and pension service never contact you by text message with a link to update your bank details. Any such message is a scam and should be deleted and reported. Now let us discuss the importance of the annual verification letter that DWP sends to many pensioners and what you need to do when you receive one of these letters in the post. The DWP periodically sends letters asking pensioners to confirm that their personal details and bank account information are still accurate and that their circumstances have not changed. This letter is a routine administrative process designed to ensure that pension payments are going to the right person and account and that all records are completely up to date. When you receive one of these letters, read it carefully, complete any requested information accurately, sign where required, and return it to DWP within the timeframe stated in the letter. If the letter asks you to do something online and you are uncomfortable with this, call the pension service on 800-731-469 and they can help you complete the process by phone. Do not ask someone you do not fully trust to help you complete these forms because providing your DWP credentials or pension details to the wrong person creates significant fraud risk. If you need help completing DWP paperwork, contact Age UK or Citizens Advice, both of which have trained volunteers who can help you safely complete official government correspondence. Now let us talk about something that is particularly relevant for pensioners who are carers, because the DWP has a specific situation affecting carers that the Public Accounts Committee flagged. The Public Accounts Committee confirmed in their 2026 report that around 200,000 cases of carers were wrongly pursued for overpayment debts by DWP due to administrative errors. The DWP's permanent secretary apologized to all those carers wrongly pursued, and a review of those cases is currently underway, but is expected to take approximately 2 years to complete. If you are a carer who has received a letter from DWP claiming you owe money related to a carer's allowance overpayment, you should seek independent advice before making any repayments. Contact Citizens Advice or Age UK immediately if you have received an overpayment demand from DWP related to caring responsibilities, because your case may be one of the 200,000 affected. Now let us discuss the broader picture of DWP error because the context helps you understand why these new verification powers were introduced and what they are genuinely intended to achieve. DWP overpayments totaled £9.5 billion in 2024 to 2025, according to the Public Accounts Committee report, representing 3.3% of total benefit expenditure. The DWP has also identified £3.7 billion in underpayments, meaning money that eligible claimants were entitled to but never received because they did not report qualifying changes. This underpayment problem particularly affects disability benefit claimants who may not have reported that their condition had worsened, resulting in them receiving less than they were actually entitled to. This is why it is so important to report any change in your circumstances that might increase your entitlement, not just changes that might reduce what you receive from DWP. If your health condition has worsened, if you have developed a new need for care, or if your financial circumstances have changed in a way that might qualify you for more support, report it. Now let us discuss what the DWP direct deduction order means because this is another new power that has confused and concerned many pensioners who have heard about it in the media. A direct deduction order allows DWP to recover money that is owed to them directly from a person's bank account without needing to go through a court process first. This power is mainly intended for individuals who are no longer receiving benefits but still have outstanding debts to DWP that they have not repaid through other agreed arrangements. This is not a power that will be used against state pension recipients, simply for having savings or for any routine pension administration matter. It applies to outstanding benefit debts. If you have received a specific notification from DWP about an outstanding overpayment debt and a potential direct deduction order, seek independent legal advice from Citizens Advice immediately. Do not ignore such a notification, because ignoring it may result in DWP proceeding with the direct deduction without further notice, which could cause unexpected financial difficulty. Now, let us talk about what pensioners who are vulnerable or who have difficulty managing their finances should know about the appointee and deputy systems that DWP uses. If a pensioner is unable to manage their own financial affairs due to illness, disability, or cognitive decline, a family member or trusted person can become their DWP appointee. A DWP appointee can manage the pensioner's benefit claims, receive communications on their behalf, and deal with DWP in all matters relating to their pension and benefit payments. To become a DWP appointee for a family member, contact DWP directly, who will arrange a home visit to assess the situation and confirm the appointment if it is appropriate. Having a trusted appointee in place prevents scammers from being able to contact a vulnerable pensioner directly about their pension details and reduces the risk of fraud significantly. If you are concerned about a pensioner in your family who may be at risk from scams related to these DWP changes, speak to DWP about the appointee option as a protective measure. Now let us talk about the relationship between your state pension and your national insurance record in more detail, because many pensioners are receiving less than they should. Your entitlement to the full new state pension of £230.30 per week requires at least 35 qualifying years of national insurance contributions. If you have fewer than 35 qualifying years, your state pension is reduced proportionally. For example, 30 years of NI contributions gives you approximately 6/7 of the full amount. You need a minimum of 10 qualifying years of national insurance contributions to receive any state pension at all under the rules that apply to people reaching state pension age from April 2016. For those who reach state pension age before April 2016, the old basic state pension system applies with different calculation rules based on their historical national insurance record. You can check your national insurance record online at gov.uk and see exactly how many qualifying years you have, which years have gaps, and what options are available to fill those gaps. For the current 2025 to 2026 tax year, voluntary national insurance class 3 contributions cost £224.20 per qualifying week to purchase. This sounds significant, but one qualifying year of voluntary contributions can increase your annual state pension by around £330 per year at current rates. If you need only 1 or 2 more years to reach the full state pension rate, paying voluntary contributions could represent a genuinely excellent financial return on that investment. The deadline for paying voluntary contributions for historical gaps going back to 2006 was extended to April 2025 and has now passed, but you can still fill gaps from 2018 onwards. Speak to the Future Pension Center on 800-731-175 if you want to understand your specific NI record and whether paying voluntary contributions would increase your state pension. Now let us discuss pension credit one final time, because many pensioners who are entitled to it are still not claiming it, and that is leaving genuinely significant money unclaimed. Pension credit is not means tested against your savings in the same way as some people assume even pensioners with some savings can qualify if their weekly income is below the threshold. The guarantee credit tops up your weekly income to £238.65 if you are single, or £364.35 for couples. Even a small pension credit award of just a few pounds per week can unlock the free television license at age 75, free NHS dental treatment, and council tax support. The DWP estimates that hundreds of thousands of eligible pensioners are still not claiming pension credit, leaving significant amounts of money sitting unclaimed every single week. You can check your eligibility for pension credit online at gov.uk using the pension credit calculator, or by calling the pension credit claim line on 899-1234 completely free of charge. If you qualify, you can claim pension credit up to 4 months before reaching state pension age, and a successful claim can be backdated by up to 3 months from the date of your application. Now let us address one more important topic that pensioners who receive their state pension by direct debit or standing order should understand about the payment process. Your state pension is paid every 4 weeks directly into your bank account by DWP, and the payment date is set based on the last 2 digits of your national insurance number. If your payment date falls on a bank holiday weekend, your payment may arrive on the last working day before the bank holiday rather than on the usual scheduled payment date. This is completely normal and expected if your payment does not arrive on the usual date. Check whether there is a bank holiday that might explain a slightly earlier or later payment. If your payment is genuinely late and there is no bank holiday explanation, contact the pension service on 800-731-469 to check whether there is a problem with your account details. Always wait at least 2 to 3 working days before reporting a late payment because bank processing times mean payments sometimes arrive slightly after the expected date shown. Keep a simple record of your expected payment dates so you can quickly identify if a payment is genuinely missing rather than simply being processed at a different time than expected. Now let us address a final topic that has generated significant concern, the question of whether pensioners living in the UK but born abroad face any additional changes in 2026. Pensioners born abroad who have lived and worked in the UK and built up national insurance contributions are entitled to receive the UK state pension on exactly the same basis as British-born pensioners. Your place of birth does not affect your state pension entitlement. What matters is your national insurance contribution record and your residency status at the time of your claim. If you were born abroad but have lived in the UK and paid national insurance for the qualifying number of years, your state pension rights are identical to those of any other UK pensioner. However, if you were born abroad and have spent significant time outside the UK, your national insurance record may have gaps that could affect your state pension entitlement level. If you are uncertain about your national insurance record or your state pension entitlement, contact the Pension Service or visit gov.uk to use the free Check Your State Pension tool. Now let us bring this entire video to a close with the most important summary points that every pensioner receiving their state pension into a bank account needs to remember from today. First, your state pension is safe and is explicitly excluded from the new DWP bank monitoring powers that apply only to means-tested benefits like pension credit and universal credit. Second, the real and practical risk is that mismatched or outdated bank account details could cause your payments to be verified or potentially paused until the correct information is provided. Third, respond promptly to every DWP letter and update your details immediately if you have moved, changed banks, changed your name, or had any change that affects your records. Fourth, be extremely alert to scam callers claiming to be from DWP. The genuine pension service number is 800-731-469 and DWP will never ask for bank passwords or money transfers. Fifth, if you receive pension credit as well as your state pension, ensure your savings and circumstances are accurately and fully declared to avoid any issues with the new monitoring powers. Sixth, check your national insurance record online at gov.uk to ensure you are receiving the correct state pension amount and consider voluntary contributions if you have qualifying gaps. Seventh, if you have not yet checked whether you qualify for pension credit, do this today using the free calculator at gov.uk or by calling 800-99-1234 because it is worth checking. The Pension Service on 800-731-469, Age UK on 800-678-1602, and Citizens Advice at citizensadvice.org are all available to help you navigate any of these changes with free expert support. If you found this video helpful and informative, please like it right now so that more pensioners across the UK can find this accurate and verified information exactly when they need it. Subscribe to UK Housing Alert and hit the notification bell so you never miss a DWP update, state pension change, housing right, or benefit entitlement update that could directly affect you. We cover DWP changes, state pension news, housing law, tenant rights, and pensioner entitlements every single week in plain simple English so every pensioner always knows exactly where they stand. Share this video with every pensioner you know because the combination of accurate information about DWP changes and awareness of pension scams could genuinely protect their financial security today. This content is educational and based on UK DWP official guidance, Public Accounts Committee reports, and verified sources as of July 2026. Always consult gov.uk or a qualified professional for personal advice. Now, let us address one final area of concern that many pensioners have raised specifically regarding the safety of their pension money during this period of change in 2026. Your state pension payments are protected by multiple layers of legal and administrative safeguards that make it extremely unlikely for your money to simply disappear from your account. The DWP must contact you directly before making any decision that affects your state pension payments, and you always have the right to challenge any decision you believe is incorrect. If you believe DWP has made an error affecting your state pension payment, you have the right to ask for a mandatory reconsideration of that decision within 1 month of receiving it. A mandatory reconsideration is completely free to request and requires DWP to look at their decision again with fresh eyes before it becomes final and binding on your pension payments. If the mandatory reconsideration does not resolve the issue in your favor, you have the further right to appeal to an independent first-tier tribunal, which is also completely free. These appeal rights exist specifically to protect pensioners from administrative errors and ensure that the DWP cannot simply make a decision affecting your pension without proper accountability. The Financial Services Compensation Scheme protects savings of up to £85,000 per person per UK regulated bank or building society if your bank were to fail. This means that even if you have concerns about your bank's stability, your savings up to that threshold are protected regardless of what happens to the bank itself financially. Your state pension payment that has already been deposited into your account is your money and is subject to the same bank deposit protection as any other money in your account. If you have more than £85,000 in savings with a single bank, consider whether spreading savings across multiple UK-regulated institutions might give you broader protection. Now, let us talk about digital access and what to do if you are a pensioner who does not use the internet and cannot access the online services described in this video today. Everything that can be done online with DWP and the pension service can also be done by telephone or by post if you do not have or prefer not to use internet access. The pension service telephone number 800 700 and 31 469 is staffed by trained advisors who can help you with every aspect of your state pension, including checking and updating your details. The pension credit claim line on 899 1234 can handle your entire pension credit application by telephone without you needing to access any online system or fill in any online forms. If you receive official letters from DWP and prefer to respond by post rather than online or by phone, you can write to the pension service at the address shown on your letter. Age UK volunteers can also help pensioners without internet access complete necessary correspondence with DWP and navigate the pension and benefit systems with confident personal support. The digital divide must not create a two-tier pension service where those without internet access receive less support. All DWP services should be equally accessible by phone and post. If you find that DWP is pushing you toward online services and you are unable or unwilling to use them, you are entitled to ask for telephone or postal alternatives without any penalty. Now, let us close with some words of genuine reassurance for the many pensioners who have been worried and anxious about these DWP and bank account changes throughout recent months. The vast majority of pensioners who have accurate details on record, who are not receiving pension credit with undeclared changes, and who respond to any DWP letters will be completely unaffected. The genuine risk is much smaller than the alarming headlines and social media posts have suggested, and understanding the actual facts is the best protection against unnecessary worry. Your state pension is based on your lifelong national insurance contributions and cannot be taken away by savings checks or bank monitoring powers under the current law in England. The most powerful things you can do right now are to check your details are accurate, respond to any letters, be alert to scams, and share accurate information with people you know and care about. The Genuine Pension Service is there to help you, not to catch you out, and the thousands of advisors who work there want to make sure your pension reaches you safely each and every month. Thank you sincerely for watching this important video today and for taking the time to understand these changes so that you and the pensioners you know can navigate them with complete confidence.